Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel Elconin, along with Brianna Valesky, and we have Frank Zorrilla on the line. He is founder and chief investment officer of Zor Capital. Frank, how you doing on this holiday weekend Friday?
Doing well. Can't wait to start the weekend.
Yeah, okay. All right. Well, before we do that, let's hop into the markets here. And let's start out with some stocks that are in the news this morning. Deere had good earnings. JP Morgan kind of caught this one wrong with a downgrade last week. Got a nice pop up. Is Deere something in your portfolio or something you'll like to keep an eye on?
It's not in my portfolio, but any stock that reacts extremely well to earnings definitely makes my watch list. Because normally when you have a company that comes out with their numbers and the stock is up X amount, maybe 4 to 5% for the day, that normally means it caught the street by surprise, and you might have that post-earnings drift that might last an entire quarter. When I'm looking at Deere now, and Deere has been trading sideways for a very long time. And normally when you get this type of news, if you're able to break out of the range, you might have a trade for the next 30 to 45 days until the next earnings.
Okay. All right. Moving on. Foot Locker here beat the street, trading at a new all-time high. Any thoughts on Foot Locker?
Look, if you're long, you're long. It's great. I mean, this thing has been in an uptrend for a long time. I mean, since 2009, it was trading at 10.65 now. At some point, if you're long, that's great. To start a new position here, we'll probably wait for a pullback.
Okay. Airlines really took it on the chin the last couple days. Love Southwest Airlines got things started. Have you been in the airline stocks, or are you looking to get into them?
Actually, no. I'm a little concerned with the airline stocks. There was some put buying in JetBlue recently, and some of these airline stocks have been hedge fund hotels. If you look at some of the holdings, American Airlines have been, it's been owned by many hedge funds for a long time. And that's great while the stock is going up. But the concern is once they break down, then you have to be careful because, these guys will all get out at the same time for the most part. And that's probably the reason why you might continue to see, more selling pressure, and specifically in American Airlines. Again, it's been a hedge fund hotel for a very long time.
I like
and
that. I've never heard
these
that.
guys, they mimic each other. They're looking at their own trades. They do the same thing for the most part. They get in at the same time, get out at the same time as well.
I've never heard that term before, a hedge fund hotel. You're just talking about how they mirror each other in some of the positions, check in and check out at the same time. Good term. I'll have to use that one in the future. Moving on, the energy sector. Crude, let's first just look at the crude market. Have had a nice rally up from the lows in the mid-40s. Now running into a little resistance, a little consolidation here. Goldman Sachs came out with their bearish call earlier in the week. Did put some pressure on the issue, but still kind of just holding in there. What's your outlook on crude?
The last time I was on, we spoke about crude oil, and I said, look, if I was an asset allocator, I would be buying some crude oil on the way down. Because, again, asset classes, once they reach a certain level, down 30, 40%, they normally tend to bounce. Crude did exactly that. It bounces, been going sideways. It looks constructive to me here, technically speaking. Even the oil sector, the XOP, XES, OIH, they all look very constructive. I don't have a strong feeling in regards to crude oil. All I know is that, technically speaking, they've been basing for a while for the last 3 months. What normally happens is after a tremendous downtrend, once the asset class starts to base, all that says very simply, it's got a brand new set of stockholders that believe there's greener pastures down the road. And once it breaks that range, it normally starts a second leg up that might last a few months.
Okay, gold market here kind of been left for dead, trading up and below the $1,200 level. Really range-bound trading. Any interest in the gold market or gold stocks?
Not at all. Not at all. There was some. There were certain miners that looked very constructive recently. For example, ABX. But miners are very tough to trade. Gold is very tough to trade. When I look at some of these ETFs, I prefer to buy them on the way down when they're down multiple days in a row. Gold is just very sloppy here. The miners, again, they look okay, but I'd rather buy them on deep pullbacks. And right now, if you look at the GDX, it's gone from 17 to 21, stopped exactly at the 200-day moving average, and now it's probably going to trade sideways for a while.
Okay, let's talk about your background and your trading style. You started out on the street and decided you kind of wanted to run your own shop, and that's what you're doing. You say you have a no nonsense approach to trading. Could you just give us a little hint at the technicals and what indicators you like to use and how what fundamentals you use, if any?
Okay, so I run the way I run my book is very simply. I run a piece of my book passive, where I'm long the SPY, the Qs, the IWM, VEA, Europe, global ETF. And then I also get involved in country ETFs that are down 20% or more once they're extremely oversold, because normally that's when the opportunity arises and you get a very nice 10 to 15% move in the short term. So that's a piece of my business. And the reason why I believe in passive and tactical is very simple. When you have a bull market, it's extremely hard to outperform the S&P 500. And then people don't realize that outperformance normally comes in when we have down years. If you look at the stats, you look at Harvard, Yale, these endowments they've outperformed the S&P 500 over 15, 20 years. But what people don't realize is that over 50% of those years, when the market was up, they've underperformed. They only outperformed the S&P 500 when the market was down, 2000, 2007, 1998. So piece of my business is very simple, like I said, passive. The other piece I'm looking to outperform is when I'm doing some swing trades, and my swing trades are based on my time frame. Within my time frame, which is roughly 30 days, the only thing that matters is momentum. And if you punch up the best performing stocks in the last 30 days, you'll see that you're going to have stocks you never heard of before. You're going to have small cap companies. The majority of them will be small caps, float under 100 million shares. And what normally happens before they make a very nice run is that they normally are trading in a very tight manner. And then once they break that little contraction, they tend to expand for 3 to 10 days. And that's where I focus my trading.
Okay, very well explained there. So like a momentum stock like Netflix here, is that something that's got your attention at all?
No, it doesn't. Not based on this setup here. I'll tell you, for example, something that I look at that I'm long right now, NXPI, which I'm long just recently from 514 at 102.88. What you can see is very simply the company came out with their numbers, gapped up, went sideways for a month. At the end of last week and this week, the stock started to tighten up, and now it's starting to move out. That's something that I look at. And again, there are different ways. For example, there are different ways to narrow down your universe of stocks. Okay, you can narrow down your universe based on earnings and growth, and that'll give you companies like Netflix, Apple, and that will probably make you feel more comfortable. But if your job and what you're looking for is to mirror what the best performing stocks look like and do within 30 days, chances are that you're not going to look at Netflix nor some of these large cap companies, because they tend to go up, but not 10 to 15% like the smaller ones.
Okay. All right. Moving on to the financials. Now, you worked in the financial sector in the brokerage industry. You left it. A lot of changes have went on in that industry here. But the financials have had a nice run as of late. Let's just take Goldman Sachs here, getting back over the $200 level. You think they're still going to continue this run, or maybe ripe for a little bit of a pullback?
I mean, look, these stocks are in the bull market. They're going up, so you're always going to have pullbacks. And when stocks and the market are pretty much in bull markets, pullbacks are to be bought until proven otherwise. I think Goldman is fine. I just recently I had a trade in Goldman, which is something that I look at very simply. Long the stock on 5.4, 197.90, and you can see a cup in hand. It starts to tighten up at the very end, and then it makes a 3 to 5 day move. Once it makes that 3 to 5 day move, then it tends to go sideways to down.
Do you trade?
That
Do you trade the common, or do you try trade the options on them for that time frame? For that kind of time frame.
no, I don't do options. Only common.
Okay, only do the common, get your bang for the buck here. Social media stocks here. I mean, Facebook has had a nice run. Kind of got hit off earnings here. Is Facebook something you keep an eye on?
You have to. I mean, Facebook has been trading pretty much sideways since July of 2014. It had the last that big earnings report on 7/24/14. Stock hit a high of 76.74. We're at 80.48. It's done nothing pretty much for a year. I look at Facebook and Apple, Amazon. When the market is down multiple days in a row, I tend to go to the institutional stocks and also the index ETF. So if the S&P 500 for some reason or another is oversold and I'm looking for a bounce, I'm going to gravitate to some of these large cap companies. And then as the market settles down, then I'm going to go back to my small cap, the stuff that works in the short term. So Facebook is something, look, right, the stock is trading sandwiched between the 50-day and the 200-day moving average. It looks okay. I have no interest in the stock right now. If it goes down 4 or 5 days in a row, I might have an interest for a bounce.
Do you short stocks at all?
I do, very rarely. And when I am looking to go short, I tend to go long the inverse ETFs, just because, again, you take away that company specific risk. The last thing you want to do is go out there and short something that gets bought out the next day. If I'm looking to go short something, for the most part, I'm going long the inverse ETFs.
Okay, all right. Just based on the broad market here. Just moving on. News earlier in the week about Yahoo and Alibaba. They slammed the Yahoo off the news. It's battled back. Baba stalled a little bit after earnings, but now has cleared the $89 level here. Do you look at these stocks at all? Have a preference between the two, or something that's not on your radar?
Yeah, I don't look at Yahoo, but Baba is something that you and I spoke about the last time, that this could be an index stock at some point. Look, I think Baba's technically is turning around. Again, they came out with the numbers. The stock reacted positive, in a positive way to the numbers. It had a nice gap up. It went sideways. It allowed the 10-day to catch up, and then it starts to move up again. I wouldn't buy. It's up 3 days in a row. I wouldn't buy it, but I think on any pullback down to the 90 level, I think you can own the stock, and I think that this thing is going to start a brand new uptrend.
Yeah, it's definitely had a nice move here. Moving on to some other issues. BlackBerry has some news today, doing a buyback. Not a very significant one here. I mean, this stock has been dead money for quite some time. Any thoughts on BlackBerry?
It's probably a debt company as well. I mean, they can probably do better things with that money. So no, look, a buyback is a buyback. If it's a large one, over 10% of the company's float, within a year or so, that tends to be positive. But if it's not, for a company like BlackBerry, there's nothing there for me.
Okay, going back to some of the other social media stocks, Twitter kind of got the double whammy on earnings released early during the day. Kind of got some panic going, been hit afterwards. Do you have any areas of interest in Twitter?
I do, but it's obvious. I mean, this stock was down huge the day they pre-announced, pre-released their earnings before the bell, and it hasn't been able to bounce, which it just goes to tell you that there was a lot of people involved, and they're still selling. They still have an interest in selling. This thing hasn't found the floor yet. From a company's perspective, I like the company. I like Twitter. I think Periscope is huge, and it's something that, not from a trading perspective, but something from an investment perspective, I would be looking to buy the shares close to 35 and just put it in the books, because I think, look, it's not going away, and I think that a company this high profile will make it happen at some point, and it'll turn around.
Yeah, I've definitely heard that sentiment. Going back here to some other issues, this morning. Kind of a mixed bag out of Hewlett-Packard. $34 has been major resistance for this thing. Did sneak our nose above it in pre-market trading. Any thoughts on Hewlett-Packard?
No, no. I don't have
Okay.
any thoughts on Hewlett
Okay.
Packard. I see what you're seeing. It's trading now at 34.16, 34.19. No thoughts at all.
Okay, what about you did mention Apple is one of your big stocks that, on the down days just had a nice run up. Carl Icahn gave it a boost. I believe it was earlier in the week here. Is that just one of your core holdings, or is it something that you're a little bit more active in?
It's not a core holding, but I mean, I can send you a chart, and you'll see that every time the stock is down 3 to 4 days in a row, I buy the stock. And when you're trading something like this, like Apple, you don't want to wait for that cookie cutter, technical cup and handle. Here's that breakout from a brand new 52-week high. That doesn't work anymore. I tend to gravitate to these companies when they're down multiple days because that's when everything makes sense to me. If you're looking at the numbers, okay, and you say to yourself, all right, Apple broke down. I'm not going to buy, I'm going to sell it, and then it goes down 4 or 5 days in a row, and you don't believe in the company and what they do and the numbers, then that just doesn't make any sense to me. I'm looking for companies that are down multiple days in a row like Apple, if it happens, and I buy them because that's when I really do believe on what they do and the earnings behind these companies. So here the stock, some people might say it looks great. It's about to break out. I don't buy breakouts on big cap companies. I buy the pullbacks.
Final thoughts here on the semiconductor space. Any stocks you like? I think you mentioned that one. Anything else in the semiconductor space that catching your interest?
NXPI, which I own, Skyworks, which I just bought and sold. Those two stocks, there's some fundamental stuff behind them that are driving them higher, which is the mobile payment. I like those two stocks.
Okay.
And I own NXPI as a trade. Again, I own it at 102.88. I sold some on the way up already. But they're doing well, those two stocks.
Okay, just final thoughts for the market today and going into the rest of the month.
Okay, so today will be It'll be slow after 10 o'clock. Look, underneath the surface, you have a lot of divergences where stocks are not moving, along with the market. Like yesterday, I wrote a post how over the last quarter or so, stocks that are down 25% for the quarter has been increasing every single week, which is something that you don't want to see when the market is at all-time highs. But again, we over and over again, every time the market looks like it's about to break down, it just goes up. So I think you got to stay long. I think from a long-term perspective, as long as the market stays above the 200-day moving average, you should treat every single pullback as a buying opportunity.
Yeah, that's certainly the way the buy the dippers have been acting in this market. Frank Zorrilla, founder and chief investment officer of Zor Capital, covering a lot of stocks for us this morning. We really appreciate you coming on, and we'll talk to you again soon.
Thanks for having me.